Hey traders, welcome to this video. Just thought I would cover a simple yen pair. We've got the euro yen on the screen at the moment. Significant rally in line with many other assets. Actually quite different to what we've seen on the dollar yen amongst the CPI data news. And by the way, if you want to get my free training, don't forget it's underneath this video. So currently you've got your euro yen drifting away from your nearest moving average. So we know there's a very, very strong uptrend established on this currency pair. Okay, and we've seen that for a significant period of time. The last time it deviated greatly, it went to your 200 MA. Okay, that was way, way, way back in March 22. And it came off the back of a fall from your 134 down to 124. So not an enormous drop, not really as far as you saw in previous times like here, but really I would say since January, start of this year, you've not seen a significant fall. So for most people, it is begging the question, well, where do I really want to get this short? Now, because you've seen a further rise in the euro yen, and by the way, quite a few euro pairs as well, it does sort of give you a little bit of a difference between, like I said, your dollar yen, etc. But you have had your Swiss yen, your AUD yen rise accordingly as well. Now, the big thing about this particular currency pair is that you are coming to an area where you have previously seen the price get absolutely creamed. Okay, it's fallen enormously from this area. It went from 167 all the way to 113. So if there was any time for you to look at history and say, okay, well, that point looks quite contentious, this would be it. Because if you look before that, from 1998, 2008, you've got the same area. The same thing happened. So once you return to that area, once you come way, way, way back up, and you're starting to really drift away from these key moving averages, like you did around this area, okay, before you eventually pulled back here, you're probably looking for a move back nearer this key price action level here, key support. That would be about the 150 level, and it would also be in line with your earliest moving average. So I would much rather be short on your euro yen. The only thing I would say is that if you are going to do this, I would drop your time frames way, way, way down now and look for some early entry confirmation. Look for a reason to believe that this may start to bounce away. Ideally, candle wicks, larger red candles on your lower time frames give you that early indication that people are saying, all right, well, we've come back to that previous level we looked at before. Okay, it's better seen on something like your 3 monthly or 12 monthly. Okay, and we're falling away. And it actually, as well, is worth noting that you got this in 1992, you got it in 1998. I missed that earlier level off, but you've got this repeated zone for falls. So when you come back there, you really shouldn't be buying. It's not the time to buy. If you're coming up from 114 to 163, okay, you're looking at 50-60%. It's an awful long way to be going, and you really, really shouldn't be getting long that late. You can see, even on these high time frames, look how far off those key MAs you are. Thanks for watching, guys. Hope that helps get my free training underneath, and trade safely. See you in the next one.